Welcome. This is Unit 8 of a 10-part series for my personal finance money management classes, and this unit's topic is federal taxes. The essential question, what it is that I'm hoping that every student can answer by the end of this unit, is how much do they owe in taxes, and most importantly, why? The objective is that they will explore how the federal tax system works, including tax forms, deductions, filing requirements, how to understand their future responsibilities as tax-paying adults. In this unit, you'll find all of the agenda as to what we will cover, ranging from taxable income, how do you reduce your taxable income, what are some deductions, and what is something that everybody can access, such as the standard deduction versus itemizing. How much do you owe in taxes? We will cover the W-2, the 1040, and the W-4. And in addition to that, we will actually complete those forms in real time as a actual project-based learning opportunity for your students. And lastly, if you received a giant refund or maybe you owed a ton of taxes, why is that? And what can you do to fix that for future years? In every single one of my units that I provide, whether you're a student in my class or a teacher that is purchasing this content to use within your classroom, the guided notes are accessible for you as a student so that you can follow along with the content to make sure that you are understanding everything that's happening. In every single one of my units, I always start by asking the student tell me everything that you know about doing your taxes. And this gives me an introductory level overview as to what my students already know so that I don't have to reinvent the wheel, for lack of better words, and uh, duplicate things that may already be common knowledge amongst them. We open by defining taxable income. From Google, taxable income is the portion of a person or a company's gross income that is subject to taxation. It is calculated by taking your total income and subtracting all of your eligible deductions and exemptions. The two ways to reduce your taxable income, most notably, that we will talk about in this unit are the standard deduction versus itemization. We choose the option that allows us to pay the least amount of taxes legally. We open with the standard deduction, which is an amount that changes each year. And the general idea behind this is that everybody is eligible to reduce their taxable income by a fixed dollar amount, potentially lowering your tax bill. And that amount is based on your tax filing status, whether you're single or married, filing jointly, or other types of qualifications for that. But it is adjusted for inflation by the Internal Revenue Service, and for this year, 2025, it is $15,000 for an individual or married filing separately, or $30,000 if you are married filing jointly or a qualifying surviving spouse. In order to calculate our taxable income, we take our adjusted gross income, and we'll talk more about adjusted gross income at a later time, but your adjusted gross income minus, in this case, the standard deduction of $15,000. So let's say that my adjusted gross income is $100,000. My standard deduction of $15,000 leaves me with $85,000 of taxable income. I then ask students what they know about the idea of itemizing their taxes. I get a mixed bag as to what those results might be, and then we define it. Itemized deductions are eligible expenses that taxpayers can subtract from their income to lower their taxable income. If the total amount of things that you can itemize, all of those deductions add up to be a greater amount than that of the standard deduction, in this case $15,000, then you would want to choose to itemize your deductions so that you could reduce your taxable income by a greater amount. For example, if I own a home and I pay interest on a mortgage loan, or if I have significant property taxes, or I make big charitable contributions in the form of cash or donations. Do note, if you do make donations, make sure you always get that tax deductible slip from places like the Goodwill and whatnot. Or if there was a major casualty or theft loss, business losses also will translate into deductions as well. Or if I had medical expenses that surpassed a certain dollar threshold or percentage of my income, then I would be able to add all of that up. And if it exceeded the $15,000, then I would itemize my deductions to reduce my taxable income by a greater amount. And I provide you with a link to more itemizable deductions, but those are the big ones. Some of the common personal versus self-employed business deductions are as follows. Most commonly with personal deductions is mortgage interest, your property taxes, and charitable donations. Those take a big chunk out, and if you add those up and they beat the standard deduction, you're probably in a good spot. Hopefully you had a healthy year and the medical deductions isn't applicable to you. If you're somebody that owns your own business and you are self-employed, there are a number of different business deductions that you may be eligible for. And so it could be ranging all the way from buying business equipment. For example, for my business, I'm in the process of buying a utility trailer so that I can tow things around with me or haul things to the waste management facility. That is a business deduction. And as such, I don't pay taxes on the dollars that I spent to purchase that utility trailer. Home office expenses. A certain portion of my garage is carved out specifically for my business, and with that, am able to use that calculation because I have everything designated. This is all business related. In this particular corner of my garage, a portion of that space is home office expendable, and as such, I can reduce my taxable income by that as well. Vehicle use, meals only during travel or business, I'm sorry, during business travel, specifically going somewhere for a business type of an activity. Anytime I drive to a client's house, my QuickBooks accounting software automatically tracks via my phone app the distances that I'm traveling in order to conduct business, my property taxes, and again, charitable donations if I was doing that on behalf of the business. Now we need to determine how much tax you owe. And we can do this a variety of different ways, but to start, we need to figure out what our taxable income is, what types of percentages within the brackets it is that we will have to pay, and then apply them to the tax tables to determine how much tax we are responsible to pay and see if we paid enough throughout the year or if we underpaid or overpaid. The question of the day: how much tax would you pay if you earned $58,000? Well, in this particular case, we're going to say that you actually earned $73,000 for the year in gross income. But because you have that $15,000 standard deduction, we take that $73,000 minus the $15,000 standard deduction, and that leaves us with taxable income of $58,000. We then come down here on this graph that you can see, and you see that the very first $11,600 gets taxed at 10%. We operate in what's called a progressive tax schema, meaning that in those first, that each one of those rows that you see for that range, so $0 to $11,600 gets taxed at 10%. From $11,601 to $47,150, that money gets taxed at 12%. So the way that we math this out, and you can see it on the right column of this table that's right there, is that the first 11,600 gets taxed at 10%. So we know that's $1,160 plus the next set of money gets taxed at 12% of any amount that's over $11,600, and that's going to go all the way up to $47,150. And then so now we have $55,426 so far. In addition to that, we have to pay 22% of tax on any dollar amount over the $47,150 bottom threshold of that range. So in this case, $47,151 all the way up to $58,000. So for simplicity, I'm going to call it $11,000. I know that's not completely accurate, but just for easy numbers here, $11,000 would get taxed at 22%, in addition to the $5,426 that came from the first two rows at 12% and then at 10%. If that didn't make sense to you, I've got a video that you can watch here to break down how this progressive tax works. Do note there's a little bit of political innuendo in there. I'm not trying to show it to you for that purpose or whatnot, but I just couldn't find a better video that doesn't add in any kind of extra additional information in there. So here's how this would work in pictorial form. If I made $58,000, again, we would assume that I actually made $73,000 minus the standard deduction of $15,000, leaves me with taxable income of $58,000. The first $11,600 gets taxed at 10%, which is $1,160. The next set of money, which is at $35,550, which is the range between $11,600 to $47,150, gets taxed at 12%, which gets me $4,266. And the remaining portion is $10,850, which is the difference between $47,150, the bottom portion of the range on that third row, all the way up to $58,000, gets taxed at 22%. So that $10,850 turns into $2,387 in tax that I will have to pay in addition to the first two rows. So at the bottom, you can see the total is $1,160 plus $4,266 plus $2,387 equals $7,813 in total tax that I was responsible to pay. So how much tax do you owe? Well, in that particular case, we just solved for it. That tells you how much tax you owe, but not everybody's going to go out there and do that math. I'm just showing you the long form of how to solve that image or that general picture for yourself. So in this case, we are going to link to the tax tables. I've updated it. It says 2021, but I've updated it to the 2024 tax tables. For those that are earning over $99,000, do note that there is a different process for you to follow than what I'm about to tell you. So you would click on this hyperlink, and once you click on the hyperlink, it gives you a table and it gives you a bunch of different columns and rows. And you would scroll down to the dollar amount that you make per year, find the range, go across on the row from that column, and then find how much tax you were supposed to pay. And that's the way that we do it when we are not doing the long form, which I showed you earlier. So when we use that tax table, the basic algorithm for making this work is as follows. To solve our taxable income and tax owed, the very first thing we need to do, let's say we have an example of somebody that has $66,000. So this person that makes $66,000 in income, that person, let's assume they put away 3% into a 401k. If you followed my investment unit, then you would have seen that as well. And so that 3% turns into $1,980. So we would take our $66,000 annual income, reduce it by $1,980 for that 401k contribution, because we remember that that money is not taxed yet. It gets taxed upon distributions in retirement as early as 59 and a half. So now what was our gross income of 66K is now $64,020, which is taxable so far. We take away the standard deduction, which last year was $14,600. Admittedly, I need to update this slide. My apologies, which should be $15,000. So $64,020 minus that $14,600 2023 standard deduction would leave us with a taxable income of $49,420 that is taxable. I would then go to the tax table, find that $49,420, go across in the columns and then down through the rows, and then find my way to the $49,420 to see what the tax table says that I owe. And that gets us out of the idea as to how we actually solve how much tax we owe. From there, I have students rank their understanding of what a W-2 is, and I get a variety of different responses here. I show students this W-2 sample right here, and I share that the W-2 is kind of similar to like an income report card. You get this at the end of the year. Your employer is responsible to send it either electronically or by mail by the end of January 31st, and they need to send it to you so that you have access to this income report card so that you can file your taxes on time by April 15th. It's important because this document tells you a bunch of different pieces of information about your income history from the year before. Do note you only receive one of these if you are employed by someone. If you're self-employed, you're not going to get one of these. That's a whole different discussion, though. And so in this W-2 setting that you receive, the two most important pieces of information, in my opinion, that you'll find on here is how much income you made that is taxable, and then how much tax did you pay. And so once you're on this, you can find the money that you earned in gross income. You can also find quite a few of your tax deductions listed. So in this case, a 401k, as well as some of your health insurance premiums too. From there, we can also go down and then use this information to identify how much we paid in Social Security tax. We can see how much we paid as well in Medicare tax. And all of those are pieces of information we need in order to, quote unquote, do our taxes. With that information, just for a little bit of clarity, the reason box 1, where it says wages, tips, and other compensation, is different than box 3 and box 5 is because that $48,500 is taking into account, if you look down at box 12A, that $1,500 was a retirement plan contribution that is not taxed yet. So that $1,500 gets deducted from that box 3 or box 5, which was your actual gross annual income, which leaves us with $48,500 of taxable income. I then ask students, do they know why people owe money or get a refund at tax time? And oftentimes they have no idea. I then ask them what their understanding is of what Form 1040 is. I use a application called Pear Deck. It is a paid subscription opportunity where I'm allowed to have my students log into the Pear Deck, and then they can interact with the slides, and they use a draggable slider so that they can share with me in real time what their understanding of all these responses are. And then we take that information and start talking about what the 1040 is. I explain to my students that the 1040 is a basic overview of the way that you do taxes. So the 1040 is where you're going to take your information from your W-2, how much income you made, how much tax you paid, and then enter that information on this 1040. So things to know, it is due by April 15th. That is tax day. It can be completed on paper, online, or with a professional tax preparer. And then I give you a sample completed 1040 link at the bottom of that page there. We then talk about the understanding of what a W-4 is. That W-4 is the form that you will need in order to change how much tax is being withheld. And the way that we change your tax withholding is by updating a W-4 with your employer and saying, hey, I need either more money or less money taken out of each one of my paychecks to set aside money for taxes. So if you got a giant refund, or did you owe a ton of money in taxes the year before, do you want to change that? Do you want to adjust it to where that's not the case each year? Every year I have students that say, my family looks forward to this gigantic refund every single year. And that's fine, and I understand it, but you're effectively using the government as an interest-free loan because you're saying, hey, government, IRS, and if the IRS is watching this, I have no beef with you. I'm just trying to share information. Please don't hold it against me. But the general idea is this: if you give the IRS an interest-free loan throughout the end of the year, they generally just say, hey, here's your refund. It's called a refund because they're giving you your money back. You get that refund of however much money it is. Sometimes $7,000, $10,000 is $10,000 that could have been sitting in your bank account throughout the year, earning interest, whether it was in a high yield savings account or possibly in some kind of a brokerage account. Regardless, instead, the IRS took that money, they invested it and made interest off of your money for free. The W-4 form allows you to change the amount of taxes that are withheld from each of your paycheck, meaning that if you owed a ton of money on your taxes come April 15th, you could go to your human resources department. You would then tell them that you need to increase the amount of tax withheld from each one of your paychecks on a W-4. But if you got a giant tax refund, then you would want to decrease the amount that's being withheld from each one of your paychecks. And you would do that also on your W-4 by making that modification. Now what's happening is you receive more money per paycheck in income, and now you don't get that giant refund at the end of the year. You get it every single pay period so that it shows up and you can set that money aside, invest that money, save that money, pay off bills, do whatever you need to do instead of having to wait until tax time. I then have students open up this PDF, which takes them to a real world W-2, 1040, and W-4, and then I walk them through step by step how it is that they should complete it. It is time to do these tax forms for the tax unit. I have my students enter in the dream career that they chose for their Unit 1 payroll deduction packet, but for the sake of just teaching you how to do this, I'm just going to put Unified School District, and I would also have them enter in their address, but I won't make you watch me do that. Next up, for the Social Security wages, Box 3 and Box 5 Medicare wages and tips, I will enter in my gross annual salary, which they found from that payroll deduction packet. Or if you're doing this on the fly, you could just use any annual income for a career of your choosing. For the sake of ease, I'm going to use $100,000. Do note that because I'm using Cami as the ability to annotate this PDF and I do not have the paid subscription model, it is going to leave a white background so that I can't leave it clear. So you'll have to imagine what words were there behind it. For right now, let's use $100,000 for simplicity. And I'm not going to use the change part of me. Normally I would, but for this case I won't. I'm also going to put in $100,000 here as well. And so now that I've got that for both Social Security and Medicare, those are both in place. Let me shrink this so we can see everything else. We know that Social Security tax that is withheld at 6.2%. So for the year, let's say that we withheld the exact amount of $6,200 for Social Security, and $6,200 would go right here. Do note that your employer is the one that fills this out. It is not you that fills this out, but I give students this activity so that they learn how to do it. So when they get their W-2, they know how to read it. Down below here is going to be the Medicare tax that's withheld, and that Medicare tax is going to come in at 1.45%, and we'll assume that my employer withheld the exact amount of 1.45%, which is $1,450 in this person's example. And so now that we have those two pieces of information, we, in that same Unit 1 payroll deduction packet, had figured out what federal withholding your employer withheld. At $100,000, I'm just going to make up a percentage of my total marginal income tax that was taken out. And I'm going to use a number that's not going to be accurate so that we can see if we receive a refund or if we actually owe money. And so I'll just make up a number, let's say $6,000. So $6,000 is what was withheld from my paychecks throughout the entire calendar year for this W-2. And remember that the W-2 has two really important things on it. Even though everything is important, the two most important things is how much tax was withheld and how much income you earn that is specifically taxable. So from here, Now that we know that $6,000 was taxable federal tax was withheld, that's what we would put right here. Moving down, I'm going to leave these other spots blank with the exception of this retirement plan because I have all my students learn how to contribute to a 401k or some type of retirement account. Now this box would be a little bit different if we were contributing to a Roth, but because we are assuming that it is a standard 401k, not a Roth 401k, I'll just put that as XX, and let's say that I put in 3% of my total gross annual income, which would be $3,000. That $3,000 would go right here, and that is how much I put in my retirement account of my 401k. Now notice I did not enter box 1 yet. The reason being is because we're finding our taxable income so far. We would take our Social Security wages, which is that $100,000, that's our gross annual income. We would subtract out the 401k contribution because we don't pay taxes on it yet. We pay taxes on it upon retirement as early as 59 and a half years old. And so as such, I'll show you the math real quick. It would be 100,000, whoopsie, 100,000 minus the $3,000 of 401k contribution, which would leave me with $97,000. The reason that I do that, again, is because I don't pay taxes on those $3,000 right now. So this 97,000 bucks is what is taxable so far. I'm going to leave the state tax information blank for right now because it depends on what state you're watching this from and various other pieces of information, but for right now, let's leave that alone. So I take my $97,000 and I scroll down here. If this was my class, I would actually have them fill out all their information. And it sounds silly, but do be sure to tell your students not to actually put their real Social Security number. You would be shocked how many times that happens. Don't do that. Many of my students take on the role of this as a fictitious career. If they're high school students, I have them take on the role of a fictitious career at 22 years old. And the reason that I have them do that is because they've experienced some life, whether it was they went on to college or they went into 4 years of the military or 4 years of trade school or just 4 years of life. And now they have that experience on their hand. I assume that they're single, but I also am fully aware that it could be that they are not single. But we list them as single. I have them X this box right here. And again, I usually print this out and have them do it physically, or I could have them do it on a Cami as well. But for right now, now that they have been marked as single, I'll then come down here. The question is, can they be claimed as a dependent? Now, this one could get a little bit wishy-washy if their parent or guardian is providing them with more than 51% of their income, then that could be something where they would actually be claimed as a dependent. But for right now, we will say that they are not. We come down here further, assuming they have no kids, we skip past the dependent section, and then we get to line 1A where it says the total amount from Form W-2, Box 1. Well, we scroll back up here to Box 1, and that's $97,000 of our taxable income so far. So for Box 1A, I will enter $97,000, $97,000. And then we keep going through these different line items because we are saying that there is no tip income. We're not saying that there's any waivers. We say that they have no dependent care information. We look through all of this other earned income information. And since they don't own a small business and don't have any royalties, they don't have anything else coming in, we take all of that, we add it all up by looking at this line Z right here where it says add lines 1A through 1H. And then once I've done all of that, I can take this 1Z and enter in, for me, $97,000 is what I am putting here. So now that I have that information, I need to look at, do I have any tax exempt interest, qualified dividends? Do I have any kind of IRA distribution? So again, if I was to have an individual retirement account and I started taking distributions of that retirement account, that's where that money would go because it does get taxed. Same thing with that 401k. Do I have any pensions or annuities? For example, I have a pension with the California State Teacher Retirement System. When I go to retire, that money will be taxable. Social Security, also taxable. I keep looking through all of this information. If I had any investments from my stock market unit that you hopefully have already taken a look at, then you would see that if I sold any of my investments and they earned me money, that would be considered a capital gain. If I lost money, it would be a capital loss. That negative would actually offset taxes I owe. But in this case, we're saying we have no capital gains, no capital losses. Reality is we would put zeros on every single one of these, but for the sake of this conversation, I'm leaving everything blank that doesn't need to be filled out for right now. Line 9 says to add everything together. This is my total income, and I am still with $97,000. I know it's boring, but we're also assuming that these are for folks that have less complicated tax returns. Then we come down further to find that if we subtract lines 10 from line 9, then we would find that that would be our adjusted gross income. Yet again, another boring snooze fest of $97,000. Again, when you have a more complicated tax situation, this stuff gets a little more spicy. But now we move on to the standard deduction. In 2025, it's actually $15,000, but this 1040 is from 2024. If you look over here on the left side where it says the standard deduction, since we are single, we are able to take $14,600 on line 12 and take that $14,600, and that is what we can reduce our taxable income by. So that $97,000 will get reduced by $14,600. I keep looking down further and it says add lines 12 and 13 together. Well, those are not going to be much different other than it's now still 14,600 for that standard deduction. It then tells me, and I'm looking at line 15 now, to subtract line 14, which is 14,600, my standard deduction, from line 11, which was my taxable income from the W-2. And so when I take 97,000, I'm going to cheat a little bit and use my calculator because I'm recording and don't want to fumble in front of you folks. 97,000 minus 14,600 is $82,400 of taxable income. Now that I have that $82,400 of taxable income, I would then take that information, go over to the tax table, which I can't toggle to on this video right now, but do know that that tax table will have that information where you go down the columns and you'll find out exactly how much tax it is that you owe. Okay, now that I have gone to the tax table, and you would also go to it, and I provide you with that link inside of the slide deck, you would then go down to the $82,400 and find how much a single person would be responsible to pay. And in my case, it's $13,187. This is what I was supposed to pay in federal taxes. It then tells me to add any other additional information, but since I have no other additional info because I have a pretty bland, plain Jane type of tax return in this situation, it stays the same. I keep going down here, add lines 19 and 20. There's nothing in there because I have no children, is what we are saying. So once I take that, it's at 0. I guess I don't need to do zeros since I'm doing no zeros elsewhere. I take all of this information and my total taxes was $13,187. Now, when we come down here, we look at the federal income tax withheld for line 25 on Form W-2. I go back up here to my W-2 and it shows that I paid $6,000. So I come down here and that $6,000 right here goes in this spot here. Now that I've paid that $6,000, but I was supposed to pay $13,187, that's going to get my brain thinking. As students, I can start to think, oh shoot, I only paid $6,000, but I was supposed to pay $13,187. Well, we keep moving along. As we add lines 25A through 25D up, then it leaves us with the estimated tax payment, and it gives us the total. So in this case, $6,000. And then I keep moving down here. If I had any other type of credits, which we briefly will talk about once we finish up this whole section, we would add in any of those credits here. But since we do not have any credits, we're leaving that with a big old goose egg of a 0. And these are my total payments, which is $6,000. And then with that $6,000, I know that's what I paid once again. And then I was supposed to pay $13,187 from the tax table. My line 33, which in this case is $6,000, is more than line 24, which is $13,187. I would subtract the line 24 from line 33 because I overpaid. I can't emphasize enough that a refund is simply just that. You are getting a refund. It's like if I bought something over at the store and I returned it, I would get a refund. If I overpaid my taxes, I get a refund. That's why I say that it is important not to overpay significantly because you are giving the Internal Revenue Service an interest-free loan. So since I didn't get a refund, instead I owe money. I look at line 37. It says to subtract line 33, and line 33 in my case is $6,000 from line 24. And so I'm going to do that quick math again. $13,187 minus $6,000 is equal to $7,187. This is how much I owe. $7,187 is what I was supposed to pay, or what I have to pay now. That's what I was short paying throughout the calendar year. I then have my students sign Mr. Feldman. You wouldn't sign it as Mr. Feldman. I do always have them list their occupation, and I do that because if you go to get a loan, the lender wants to see multiple years of similar types of work. And then that gets us down here to the W-4, this form. So now in this case, I owe a big chunk of money. I don't want to have to pay that big chunk of money next year. So instead, I want my employer to take more money out every single month from my paychecks. And so I would go into my employer's human resources department and I would tell them, hey, can I get a W-4 form so that I can fill it out and make an adjustment? Well, in this case, this is the W-4 form. I would put in my first name, my last name, my address. I would list that I am single. If I didn't need anything special done, then I would pretty much just go down here and sign line 5. But in this case, because I want to have extra withholding taken out of my pay period, I would come down here to this line 4C, and then I would, depending on how frequent I'm paid, if I'm paid monthly, then I would take that total amount of $7,187 divided out by 12 months, and that would give me $599. So I would just round it up and say $600 per month. So assuming I'm paid monthly, $600 per month. Every single month, I would sign it, date it, hand it to my human resources department, and now that extra money will be withheld every single paycheck so that when I go to do my taxes the following year, I should owe just about zero, and I probably won't get a refund either because I don't want to give anybody a free loan. And that concludes our tax documents. Back to the video. After students have completed their 1040 W-2 and W-4 form, I give them a little bit of bonus information because they've now fully understood how to complete those tax documents and quote unquote do their taxes. I share with them that my time in banking, most every person I met that was ever extremely wealthy didn't just have a W-2 income that they used to put on a 1040 to then file their taxes with. Most of them had a more complicated return, and those are going to be accompanied by what are called schedules. Those schedules will oftentimes show up in various forms. But in this case, if you own a business, you'll have to complete Schedule C. Do you have investment income from the stock market or other places? Maybe some losses too. You'll then be completing Schedule D. If you own some real estate investments like a multifamily unit and you are receiving income coming from that or other flow in income, you'll be completing Schedule E and more. If you are somebody that falsifies information and get caught, they will likely have you do what's called, or have you go through the process called an audit, where a representative of the IRS comes and questions you about all the information, and you have to show them documentation to support what it is that you did for that year. Audits are not always just triggered because you did something false, but they could be triggered because you did something wrong, or there is data that is being input into your tax return that just looks a little bit sketchy, for lack of better words. There's also tax credits out there. We only really talk about deductions in this video, but tax credits are also going to be an opportunity to pay less in taxes. So the tax deductions lower your taxable income, while tax credits actually directly reduce the amount of tax you owe. So for example, I've got 2 kids. Those 2 kids are walking, living, breathing tax credits, which is wonderful. I love you kids if you ever watch this video. But they are also there to help reduce the amount of tax that I owe. If I had any kind of student loans, or if I was out there as a newer student in school, there are all kinds of different credits available, and I hyperlink that below as well. A few things to know: the IRS does not like you more than it likes me. It is just math. By reducing your taxes, you'll increase your wealth. The biggest breaks incentivize those who create jobs and those who create housing. Read that again. That is an important concept to the pathway to create generational wealth. In this class, I'm teaching you how to, for the way that I would say it, thrive in the middle class. However, if you're someone that wants to really change the trajectory of your financial family history and tree, the biggest breaks are incentivized for those that create jobs, meaning business owners, and those that create housing, meaning investors that purchase homes. If you receive a big refund every single year, you effectively gave the IRS an interest-free loan for the entire year. You could have had that money given to you incrementally on all of your checks instead of one lump sum payment in April. We close out the unit by playing a quick tax check-in Kahoot so that students can check their understanding and make sure that they understand all the topics and content that we have covered. Folks, that is the end of my personal finance unit on federal taxes. I hope that you learned something. I am Max Feldman with the Business Teachers Toolkit. Thanks for teaching the most valuable course on campus.